Buddy. Welcome to the Stock Market Society webinar. Thank you all for coming in and participating today. So one of the main things I want to discuss about today is overall market sentiment. So this is something I want to do every time I do a webinar, kind of explain what is going on in the market, what are people looking at and everything. So the main thing I'm looking at right now is obviously futures. So futures is what leads the market now. And the SPY is an ETF of the S&P 500, which shows overall market sentiment as well, overall direction. As we can see this past day, let's go to the 15-minute chart. As we can see in this past day, we actually made new highs of the week, and we're actually going into highs as well after hours. So something I'm looking at is this key level of 296.25. You guys could see this level was visited this day, pre-market, and it never opened up at this level, but which is why we're currently headed towards this level, which is why I have it indicated. I expect we could open up exactly at that level, and then shoot below. We'll see how market is tomorrow morning. I like to overall make my watch list pre-market, because since the market is so volatile, it is harder to really make a watch list when, you know, by the time the next day opens up, you know, the whole market's in a different direction. So let me add this as well. All right, everybody. So one of the main topics I want to discuss today, which I believe a lot of people have trouble with, is picking the right contract. And what I mean by that is let's go to something not the SPY. The SPY is a little bit of a tougher example. Let's say Apple, for example. Looking at Apple, let's say we're gonna pick a contract for next week, right? So something that people always have, I guess, confused is that they tend to look at volume a lot to pick their contracts, but that is a very big misconception. Volume is not it's probably one of the least important things you should be looking at. Yes, it shows that people are buying at this, expiration, this strike. So if you guys don't know, this is the strike right here. This pretty much explains which contracts you're trying to buy, in a sense. And the main things you guys should all be looking at when picking a contract should not be the volume or open interest. Open interest is how many contracts are currently open in the market, and how volume is how many were traded that day. So for example, right here at this strike at 312.5, you can see it had a volume of 12,000, but out of that 12,000, only 3 people are still holding these contracts, right? Not 3 people, 3,000. I apologize, but yeah. So that's pretty much irrelevant. You get what I'm saying? It's good to see every once in a while, but it's something that you shouldn't really base your contract off of. The main things you should be looking at when you're entering and exiting a contract should be some of these Greeks right here: delta and theta. Delta and theta, in my opinion, are the most important Greeks to be looking at. There's Vega. There's like about 2 more others. They're those, in my opinion, they're not too important. You don't really need to be relying on those. The main ones are delta and theta. So what delta is for every dollar the stock moves, let's say, for example, excuse me, let's say, for example, the stock's at 310, like Apple is currently. Let's say Apple moves to 311. We look at our delta, it says 0.43. So what it's saying is for every dollar the stock moves up or down, we're gaining or losing 43 cents in these contracts. So the option, the bid and ask, you can see, is at $3. So let's say Apple moves up $1 at 311. You could assume these would be at around 350. You get what I'm saying? So delta changes for every contract. That's why it's important to look at this and have this indicated. The way you set this up is easy. You just go to this layout area right here, this button. You would click that and then customize. And you guys could take a screenshot of this right here or do what you like. But I do look at open interest and volume, just not often. It's not the first thing that I look at. The first thing I look at is implied volatility, delta, and theta. So if you guys want to take note of this, please do. I'm sure this will help you guys very well in picking your contracts, because I'll show you some examples to see why it is important to look at. Here, I'm gonna close this down here. The next one I want to go over is theta. So theta is somewhat the same. So for every dollar, not for every dollar, for every day that goes by, it shows you how much value your contracts are losing. So for example, today's Friday or Sunday. Take this as an example, as if we were trading on Friday going into Monday. So Friday going into Monday, you could assume that our contracts are going to lose 34 cents just overnight, but it's not going to hit overnight just like that. So let's say, we took the trade on Monday, it's Tuesday. You're not going to open up Tuesday and be down 34 cents on your contract. All right. What it's going to happen is slowly but surely, your contracts are going to slowly start losing 34 cents of value throughout the day. So it won't be right away. You might lose maybe 10, 5 cents, 20 cents right away, but you won't lose the whole 34. Throughout the day, you will slowly lose value on your contracts. That is why these contracts tend to be cheaper, the weekly expirations. So as you can see, this is for this week coming up. You can see the price right here, about $300 for one contract. And the farther we go, the more expensive these contracts get. So it's, even back up to June, a month out, you see the price of one contract is now $900. And the reason is because the more time you have in your favor, the more it is worth, right? So like I said, guys, delta and theta are probably the most important contracts you guys should be paying attention at and looking at. The next thing I want you guys to pay attention at, and this is the most important thing. So I just explained, some of the important Greeks, but the most important thing you guys should be looking at when trading is implied volatility. Now, why implied volatility? So implied volatility is how much, you can think of it this way, it's how much to put it a simple term, is how much, the higher, think of it this way, the higher the implied volatility, the more expensive the contracts will be. The lower, the cheaper. So usually you want to buy on low implied volatility and sell when it's high. Now, how does implied volatility increase? Right? So implied volatility will increase. Let's go to look at the chart right now. Here, I'm going to look at the 5-minute chart. For example, when the day opens, right away when the day opens, implied volatility is high. So you should always wait about 5 minutes. Don't even take this as an example, but you should always wait about 5 to 10 minutes before trading options, unless you really just catch, the perfect, like for example, like I know Tesla, usually right at open, it has a pump. All right, so if you bought calls right here, implied volatility wouldn't be a matter because you just, you're going to make money, right? But for example, if you look at Apple, go back to Apple, your contracts are going to be hit by implied volatility very quickly in the first 5 minutes, especially on the pullback when the stock is overall bullish, right? So that's why it's important to make sure you wait those first 5, maybe 10 minutes, let implied volatility come down. And like I said, buy on low implied volatility, sell on high implied volatility. Again, implied volatility increases, right, when there's a big move in any direction. So for example, this move down right here real quick, it would have increased the implied volatility for puts. You get what I'm saying? But in general, it moves for both. For example, we let's look at this pump right here. This is the 5-minute chart. We went from 307 to 309. That's a huge move. So in any direction, let's say puts and calls, the implied volatility would have been very high, right? So there's certain ways you can play implied volatility. Obviously, if the move is missed, you wouldn't want to enter. You would probably want to wait and wait for implied volatility to drop back, and then you would wait for re-entry. Now, let's say, for example, this is actually a great example. Let's say right here, this example right here. Let's say we were to buy some calls right here, right? The implied volatility gets low because of the consolidation. So when something consolidates, implied volatility drops, right? And like I said, guys, this is the most important thing you got to know when trading options: implied volatility. I can't stress it enough. Implied volatility. A big move up, implied volatility rises for puts and calls. Consolidation, it gets low, and then let's say this is not necessarily a big move, but I guess from 308 to 306, that's not too bad. But it's those big moves that increase volatility, right? So let's say we bought calls here, or calls down here. Let's say we bought calls right here. It pumped all the way up, right? We dropped back down. You didn't sell, right? You didn't sell. Let's say your calls would have been worth an extra $1. when when you hit this point. Let me get rid of this. Apologize. Yeah, let's say we bought calls right here. Let's say it pumped to 308. You guys can see the price right here, 308. Whenever you hover over 308.50. Let's say you didn't sell, your contract is gained a dollar value. Let's say it dropped back down to here, right? Let's say you were only up 20 cents now. You know, you lost almost the whole dollar. You're still holding your contracts. Now, when the contracts come and pump back up, you would probably have to wait till, I would say, around here, around this level of 309 almost, to probably still gain the same amount of value you would have gained as if you would have sold here. And why is that? Because of high implied volatility. Implied volatility pushed the contract price up. Now you saw the consolidation, the drop, and then you had to wait till probably new highs, even more new highs, to sell for the same amount you would have sold if you would have sold here. Right? That's something just about implied volatility. You know, you guys, it definitely takes practice. I recommend you guys, you all paper trade until you understand the concept of implied volatility, because that is the most important concept you need when trading options. Right? So let's look at our products. This is the setup you guys should all be having. There's some new people that joined, so I'm going to show the setup again. Open interest and volume, like I said, is not the most important thing to look at. The most important things to look at would be implied volatility, delta, and theta. These are all the things you guys should be looking at when picking an option. Now let's go. I'm going to show you guys an example of something. Hopefully I find a good example on live with you all. Let's look at these puts for Apple. These expire in 1 week. Let's look at 300, these 300 puts, right? Let's look at the delta, let's look at the theta. Delta is 0.19, theta is 0.28. Now let's look at next week as well. Let's see what the 300s are. These 300 puts, 0.26 and 0.22. You guys see the difference right there. The theta is less because the contracts are farther out, right? And if you guys notice, the delta is what was it, 0.228, I believe, 0.28?
Mm-hmm.
0.26. Now, if you guys look at the, one of the contracts for this week that are worth 0.26, these are worth 0.24. Theta is 0.30. These are worth 153. So if you buy one contract, 153. If you look at the 300, the delta would be the same. And look how much these are worth. So for the same delta, for an earlier expiration, you would get about the same value. So let's say, like I said, delta is for every dollar the stock price moves is the value gain in your contracts. So for literally half the price, you're still getting the same delta, but what's affecting it now? The theta. That's why these are so much cheaper and they're still the same, somewhat the same. So theta is 0.28. This is 0.22. So just for 6 theta, they cut the whole price of this in half, right? So hopefully this kind of puts into your head the importance of theta and how you can see how this is affected when you're picking options. Like I said, it's going to take some more experience when, to pick actual good options. I know people that have different option strategies that go for, there's some crazy people that just look at open interest and go off that. But here's some other cool tips I want to show you guys when trading options. If you guys actually scroll all the way down, I'm using TD Ameritrade. You guys scroll all the way down and look at today's option statistics. You're able to see the total volume traded for puts, for calls, the bid, the current IV, the current IV percentile. You could look at just some more indicators, I guess, to the overall. These are all indicators, guys. So this isn't, yes, this isn't like a RSI that just moves around. No, these are all indicators for trading, even though they don't have, I guess, a physical indicator. Here's some other things you guys could look at. Like I said, I don't pay too much attention to this. It's just something you guys could look at for fun. This option time and sales shows you every option that has been traded in the past. Right before market close, right? Now, a cool trick I like to do, and just to see kind of where the big boys are putting their money. You look at option time and sales. This shows you the time and sales for that day. Is you go to quantity, and you see where everyone's putting their, this is quantity is for the amount of contracts bought. So you can see 1,000 contracts were bought at 12.15. That's a huge trade. Let me get my calculator. That's a huge trade. So what you would do is $1,000, 1,000 times 12.15. They spent about 120 or 1.2 million. I think that might be. I'm not even. I don't know. I use my phone calculator, guys. Don't don't fact check me. But yeah, this is just an example. You can see there's a lot of puts, in place. Obviously, you don't go on this. This is like going off volume and interest. Pick your contracts off theta, delta, and implied volatility. This right here, this lineup. That's what you would want. Now, real quick, do you guys have any questions that you guys would have in mind that you guys want to share, that you guys want to go over? I know, George, you asked a question today about earnings, right? Something about earnings, George, which I wanted to explain to you. Let me make sure you're still on the call. Okay, I see you. Yeah. Something about earnings I want to explain to you is if you're someone new to trading, don't take trades for earnings. Trade after earnings. Trade before earnings. Do not trade during earnings because earnings is really a gamble. You're either going to hit or miss, right? You don't need a lot of money for earnings. Usually there's a big move, but earnings is really a hit or miss. It's like a 50-50. Either, especially right now since the market is very, you could say emotional, really. The market's very emotional. So people expect bad earnings, right? Now, let's say bad earnings come out, but not as bad. What do you think the stock is going to do? It's going to go up. Now, if earnings come out and they come out worse than expected, then the stock is going to go down. You get what I'm saying? So it's really a gamble. It's like you don't know how bad earnings are going to be. So it's better to trade it before. I know one open position I have right now, which I signaled with the society. Here I go over with you all, is HD, right? Let me move this. How do I move this? Okay, here we go. HD. This is an open position I have right now. I don't have it on this account. I have it on another account. And something I see with this position is earnings are coming up, right? So let's look at the daily, just so you guys can see. Earnings are scheduled for 5/19, so that's not too long from now, right? So something about earnings, which is why I say trade it before and after, but don't trade it during earnings, is because a lot of times during earnings, you would see premiums go up. So implied volatility will increase and the premiums of most stocks go up. That's what happens when implied volatility rises. Premiums increase, right? That's why I say buy on low implied volatility, sell on high. So sell when there's that big move up. Even if you think it's going to go up $1 more, if you catch that big move up, you would have saved, you would have sold for a greater percentage than you would have maybe sold later on. So just trade it on those big pumps and dumps, whichever one. That's where you want to trade. So this is actually a big example as well. Here, actually, before I go into this HD trade, something I want to show. Let's say you're in a play, right? And let's say there's a big dump. So let's say I think that this stock is going to go up. This actually happened somewhat, but let's say you enter with calls in this area right here, right? Let's say this big dump happens and you want to exit. You have your exit strategy. You want to exit on this dump right here, right? If you have a stop loss, you're fine. The stop loss will cover you, right? But let's say you have a mental stop. Let's say my mental stop is at 234 levels. You guys can see 234 is right here. Let's say my mental stop is this 234 level, right? Now let's say it happened, this big drop. It's sitting almost at 234. This candle showed up and it had that next big drop, right? Because implied volatility would have increased. If you would have sold your puts right at this candle, you would have sold with a huge, like you would have left a lot of money on the table. And what I mean money on the table is because you wouldn't have been able to, like if you would have waited 5 more minutes, you would have recovered probably half of that trade, right? And the reason is because of high implied volatility. There's a big pump or dump. Yes, you were in calls, you were in the opposite. You would have wanted to be in puts, but you were in calls and that big dump happened and you sold on high implied volatility. That's what you want to do when you're in the money. But when you're losing money, you don't want to sell on high implied volatility. You want to sell on low. So any pullback the stock will have, implied volatility will start going back to normal. Will start going low. And then your contracts will gain a lot of value quickly. That's why sometimes, for example, if I see this big pump down, let's say I know it's oversold, I would enter with calls before I see the reversal happen, because any pullback, the contracts are suddenly going to gain a lot of premium, right? You know, it might sound weird, but try getting used to paper trading for a bit. Try getting used to that, and really you'll see a difference in your trading when it comes to picking option contracts, right? And George, what I was saying about earnings is that usually before earnings, premiums tend to increase because IV tends to increase, right? So what I did was I got some HD calls. HD I think is a great stock. If we look at the overall chart, this is the 4-hour chart now. It has made almost a full recovery from those lows that it hit, 140. So from 240, it literally dropped $100, and we're almost fully recovered. This is the key level I'm looking at, and it looks like it's going to break it overnight, as long as futures open up green. And let me get a sip of water real quick. All right, guys, and then the main reason I got in these contracts, so I got in, I believe, it's May 15th. I got in these right here, the 245, and I picked up some 250 as well. I picked up a little bit of both. I just signaled the 245 for the society, but I picked up both myself personally. And the reason is because IV is going to increase, right? So let's say we see some consolidation either way. As long as it doesn't break below this level right here, this is the key level I'm looking at. As long as it doesn't break below that, I probably won't exit that trade. If it breaks below, I'll probably cut losses. I don't think it'll be a big loss. But if this breaks through by any chance, because it's breaking through into new highs, IV is going to increase immensely, right? So these contracts are going to gain a lot of value very quickly. Right now, you can see the delta is 0.12. So if you think about it, for every dollar that goes up, I wouldn't be making much, right? But because of implied volatility, since implied volatility will start rising, this delta will stay the same, but these contracts will still be gaining more value, right? The delta won't necessarily be affected by it too much, but the contracts still gain value, right? Because of implied volatility. Implied volatility gets high, contracts gain value. Implied volatility gets low, they lose value, right? So that's why you buy on low, sell on high. And then what happens if you're, in a call and, implied volatility gets high and it's in the opposite direction as you? Wait for that pullback, and then that's when you sell. And I know it's scary. I've personally been in those where I exit the second the pullback starts happening, and, I exit on high IV. It fucks your contracts up, it really does. So take maybe 5 more minutes, it's going to have your heart pounding, but take 5 more minutes, have that level that you're looking at that you don't want it to break. If it breaks it, then maybe exit. But once you see that pullback, your contracts are going to gain a lot of value very quickly. So you'll be able to sell for less of a loss than you would have if you would have just sold the second it started dropping. Now, this trade overall looks solid. It's got earnings coming up. I think it's going to be a great trade for the side. I think we're going to profit very well on it. If we look at the daily, HD has been ripping up higher. So is there any stock you guys would want me to review or anything like that? Just let me know in the chat. You guys can see I was just looking at the travel sector, the airline sector. These are some of my favorite stocks, my favorite options to play. Coke was actually Coke looks like a decent buy right now as well. It looks like it can come and retest. It's either going to be stair stepping or it's going to retest this 49 level. That's what I'm looking at right now. Starbucks. I'm actually in some Starbucks calls. I got these calls. I told you about it, George. That pretty early. So I actually got these Starbucks calls. Here, I'll go look at it. On this dip right at the open. So right at the open, while the stock was still falling down, I grabbed my calls. Why did I do that? Why, Alex? You're crazy. Why did you grab calls when the stock was still falling? Because the second there was any pullback, my contracts were going to gain a lot of value, right? So, I was looking at the 1 minute so if I actually, let me move this here. You guys can see a little bit of my setup. Right, so I was looking at this was the 5 minute. I remember this trade exactly because I took it Friday. And I was looking at the 1 minute at the same time, right? So I entered this trade on this candle right here. It was at 935 candle. And the reason I entered that trade is, like I said, the second there was going to be any pullback, my contracts were going to gain a lot of value. So that's exactly what it did. Once it started pulling back, my contracts gained. I was almost at 100% right here at this peak. I did not sell because I thought it would revisit highs. I obviously didn't have that big sell-off. My contracts lost value, but I kept holding because I'm pretty bullish on Starbucks. I think Starbucks is a great stock to buy. If we look at the larger time frames, like the 4-hour, you see all these green candles pulling up. Rejection right here. So what this candle shows you is that sellers stepped in and buyers came and rejected the sellers. They pushed the stock right back up. And if futures open up green, I think we could see this around I expect it to open above 7-8. So 78, we'll see about that. Let's see what you guys dropped in the chat. SYBR. Yeah, I got you in 1 second. Let me finish up this analysis. Yeah, but overall, I'm pretty bullish on Starbucks. I don't know if I'll be bullish on it for long because this could be, if the market starts to pull back, and honestly, I'm scared about that because, I'm sure you guys are all aware of as well the jobless claims that are going on. Huge amount of jobless claims. So I'm scared we're going to see a pullback soon in the market. I try not to swing, even though I swung these. I was pretty confident that the market would be green. We had a nice bounce here. You can see a consolidation, push up, almost rejection, push up. So I'm bullish on Starbucks, but be very cautious trading, guys. Be very cautious. Look at, what was it? Let me see the chat again. SYBR. Personally, I've never traded this stock personally. Let's see. Let's do an analysis. Look at recent news. So one thing you want to know is whenever you're day trading, unless you're really swing trading for long term, before you even enter a trade, before you look at a trade, look at the recent news, because the technical analysis could be showing one thing, but you can look at the fundamental, and you might see something else that either they partnered with something, either they got a lawsuit, either things that if you just trade off technical, you won't be aware of. So look at like the first 2 weeks. I recommend if you're gonna swing trade for like a day or two, and it's gonna be a minor swing, I'll suggest not to use this news section, but to use some other news sources, third-party news sources. I apologize for that. Yeah, let's see what's up. Let's see. CyberArk named the overall privileged access management leader. Oh, that's great news. That sounds good. Clubhouse virtual. Okay. This is all old news, so I don't need to look at this. I just need to look at these two right here. All right, so that's pretty bullish news. We got earnings coming up 5/13. Oh, so this is coming up real soon. It's coming up real soon. Let's see. This actually looks like a great stock to buy some calls in, right? And the reason I say this, if we don't get this roof right, so this could kind of top out. If futures open up good, I'm sure this will break through, so no problem. It seems like a pretty bullish stock. I would definitely play it, but I wouldn't hold through earnings. And one, because like I said, earnings are now, earnings are, they're weird right now because people expect bad earnings. Some people expect good earnings for certain companies. This looks like maybe a cybersecurity. Yeah, I got calls. It's been going up. It's a good. You think I should hold? Negative pops. Negative. So the reason I say not to hold, and you're gonna hate me if it actually does end up popping and breaking highs, but it's just too much of a gamble right now. You don't want to lose all your gains on a gamble. If anything, hold. If you're in a few contracts, hold one contract. Maybe sell whatever you have for profit. Hold one contract, and let that contract run through earnings. But it's very Did you see like Twillo? What if that happens? Oh, I saw Twillo. I saw Twillo. That was a great one. It's just iffy. I wouldn't even hold till the day before earnings. I would sell. What's today? 11th, 12th. Sell by Monday or Tuesday max. Tuesday max. You got to be out that contract. if you're more a risk taker, definitely hold. I mean, it looks like a good company. I can't, I haven't really done the fundamentals to see what people expect, but just off technical and the recent news it had, I would expect this is a bullish stock. Just be very careful because often a lot of stocks tend to sell off the day before earnings. People tend to lock in profits because people expect that, right? So, for example, for my HD trade, this is pretty much what I'm doing. I'm just writing premiums, right? So I know premium will go up because earnings are coming up. What the hell is going on? It's not letting me type. It's tripping out. But yeah, that's what I'm doing with HD. So I'm running up HD right now before earnings, and I'm gonna sell. I'm not gonna play through earnings. I'm just gonna sell before. But it's pretty much the same thing people do. So if I'm selling let's say I sell the day before, 2-3 days before, that's what everyone else is gonna be doing, right? So be cautious with that. Let's see. Does anyone else have any other questions about maybe picking contracts, implied volatility? Yeah, no problem, no problem, dude. Yeah, of course, of course. Oh yeah, now I forgot to mention, guys. Yeah, James could not make it out. I contacted him. He had a few things come up, so I told him I would take over the webinar. The main thing I really wanted to go over was picking the correct options, knowing which contracts to pick. If you have the money, you shouldn't really be buying, weekly. You should be buying contracts only about a month out because theta is not an issue, So, really, that's the main thing I wanted to go over. If you guys have any questions, I guess I'll be on for another, 5 minutes or so. But I'm going to conclude that webinar there. A quick 30 minutes to review how to pick the right contracts. Me and James are going to start doing webinars a bit more often. So if you guys want to tune in to those, I would very much appreciate it. James is a great trader, multi-million-dollar trader. So he's got a lot to use. What indicators do you use? Aha, that's a great question, Pops. Yeah, I just started sharing my screen again. Any oil stocks? Oil, I'm iffy about oil. I do have some USO calls, but I actually got caught. I'm in one of these calls. I'm in they're for January 21. I believe it's these right here, and it's like the 12 to 100. So these calls, I don't even know if they're gonna gain value. Really, I'm just in them now. I got a reverse stock split happen to me while I was in calls. This is an example of what would happen. The whole expiration does a reverse stock split as well. Yeah, but oil, as of now, it's I'm bearish on it. I played some puts on it not too long ago. I would have to give you an update on some oil stocks. I'm sure if you ask the society, someone will be able to help you out in there. And he said, what indicators I use? Right. So the main indicators I use, let's go to, let's say, Apple, for example. The main indicators, I'm gonna give you my top 5 indicators, man. Right here, delta, theta, implied volatility. That's 3. Those are 3 indicators, right? Let's see. Let me move this right here. I can never click that. My third would be volume, or fourth would be volume and price action. So here, let me remove this. And you might be sitting there, you're laughing, you're probably like, oh, these aren't really indicators that he's saying. They are. These are the best indicators you can use. Actual indicators show past price action, right? So the 5th best thing to use as an indicator is price action. So knowing what this means right here, this shows that sellers pushed the stock all the way down and buyers came and pushed it right back up, right? Let's see what he has. How do you use theta and all as an indicator? Is that only for contracts? Yeah, that actually is only for contracts. If you were to, buy shares, the best indicators would be volume and price action, period. Those are the best indicators. Now, if you learn volume, price action first, and then you put some actual indicators, that's like, it's like icing on the cake, right? So here, I'll go over some of the simple. Like I said, I have a few sets. I actually, I was just speaking about this with a few of my close colleagues that I need to sit back and review all my strategies and pick my top 3 most consistent. This is probably one of my favorite ones though, the VWAP. The VWAP, in my opinion, is of an actual indicator, probably one of the best indicators for day traders, right? You wouldn't use this on the daily chart, right? Because it looks like baloney, right? You would use it something like the 5-minute, the 1-minute. And as you can see, I mean, it's pretty self-explanatory how it works. Now, excuse me. The reason I like the VWAP so much is because, I mean, I'm sure you know about EMAs, SMAs, the RSI, MACD. Those are the normal indicators everyone uses, right? Here, I'm gonna show you what this is. This is the VWAP, the TTM scapular alert. The TTM scapular alert is this white arrow. It actually pops up super late, so I only use it to review my trades. So for example, this one right here popped up probably when this candle already showed up. This one popped up probably when this candle showed up. You know what I'm saying? So they're pretty late. They're behind, but I use them to review my trades. And the VWAP, the reason I love this indicator so much is because it's a volume price action indicator. So the way it makes these lines is not based off past price action. It's based off volume. So like it multiplies volume with something else. I don't really know the specifics, but it goes off volume, right? So it's not showing past price action. So using EMA, SMA, MACD, RSI, all that is past price action. That's what it's showing you. So pretty much you're seeing, the RSI, the MACD, all those other indicators are showing you what the chart is already showing you. So if you learn how to trade with price action, trade with volume, when it comes to picking contracts, theta, delta, implied volatility, if you learn how to trade with those, when you put some actual indicators like the VWAP, I do have some EMA strategies I could show you guys. I used to have a bunch of stuff, right? But it would be icing on the cake once you put the actual indicators on like this. This is probably my most used, just the TTM, scapular, and VWAP. I do have some crazy ones. For example, this EMA strategy. I have a bunch of different EMA strategies. I have another one a good friend taught me, which is looking at the 5 and 10. There's a bunch of strategies you could use. This strategy, I think, was one of the first ones I started, somewhat using the TTM, the MACD histogram. Like I said, everyone, there's a bunch of strategies that are available for use. I think it's a lot cleaner if you just if you learn how to trade price action, if you learn how to read candlesticks, you learn how to read support and resistance. Once you put actual indicators like the VWAP, it's just bread. It's like icing on the cake, everybody. Icing on the cake. So learn without indicators, and then put indicators once you know how to trade. So if you're somewhat new to trading, this is what your screen should look like. Just this, and drawing tools. So tools like this, bam, or you know what I'm saying, different drawing tools for support and resistance. From you just drop that line right there. Oh, excuse me, everyone. But yeah, just focus on price action, focus on learning how the candlesticks move, and then once you use actual indicators, it's icing on the cake. Apple's been it's been on a tear right now. But yeah, any other questions, everybody? Wow. Oh, I'm about to sneeze again. And stop sharing my screen here. What about any other stocks? How do you use theta and other indicators and that? Yeah, that is only for contracts. Everything else is price action, simply price action. You mix price action in, you'll be a great trader in no time. Let me check the Discord, see if anyone has questions there. Nope. All right. Well, I'm gonna end this webinar here. We've been going on for about 45 minutes. Like I said, James gonna make this one. He's gonna probably most likely be on the next one. Do I find trading forex or stocks easier? I don't trade forex. I eventually want to learn. James, he is a very good forex trader, so I eventually want to learn from him as well. There's a few other people in the society that trade forex, so I plan on learning with everyone, with the whole society. I'm not going to be, you know, doing it too much on my own. I'm going to take advantage of the society, ask questions when I get the chance. We do have Forex experts on there. All I've heard is that Forex is mostly technical analysis, and like stocks is more fundamental and technical. So you got to know when news is coming out, this and that. Forex is more, you see the pattern, or most likely, trade the pattern. So I guess just, depends up to you. Maybe flip a coin and decide which one you want to trade. You get what I'm saying? But definitely, if you're good at technical analysis, which is price action, you would be good at Forex. So I've been told by a lot of people I will be very good at it. So I plan on doing it soon. Yes, sir. Yes, sir. No problem. Glad to have you a part of the society. And everyone, I'm going to cut it here. Uh, Thank you all. If you guys, learn something, please leave a testimonial maybe. I need, nobody's really left a testimonial in a while, but yeah, I appreciate you all coming out, and we'll host another one next week as well. So yes, sir. Thank you all. All right. You guys have a good one. Enjoy your day. Bye-bye.